By the end of this video, you'll have mastered every single candlestick chart pattern there is. Take a moment to read these disclaimers. Here's a reminder of what a candlestick chart looks like. The thick middle part of the candle is called the body, and you can see these thin parts up here called the wicks. There are two key factors you need to focus on to understand candlesticks: the relative size of the body and the relative size of the wick. Now, relative is a very important part of this word, and you'll understand why in just a second. Let's start by going over the relative size of the body. First, this is a big bullish candle. White candle going up. It means it opens down here and it finishes up here. It should be obvious that price moving up like this is bullish. Next, let's take a look at a small bullish candle. Small is relative, so is big. Remember, whether a candle is small or big depends on the size of the candles around it. In this example, clearly this candle is smaller than this one, so this one is going to be less bullish than this one, even though both of them are bullish. Now let's take a look at a big bearish candle. This is a bearish candle which opens up here and closes down here. In this time period, the price goes down. You can see that this is a big bearish candle. Why is it big? Because it's the same size as what we've considered a big bullish candle, and it's bigger than what we've considered a small bullish candle. You can apply the exact same logic to a small bearish candle. Now I'm going to plant the seeds of the visualization technique, which will later allow you to master every single candlestick chart pattern there is. I want you to view these candlestick bodies as armies. Here, when a candle body goes from down here to up here, imagine an army of bulls marching upwards. If they march up a lot, well, that's pretty strong. That's a pretty strong army with a lot of stamina. They march up a little bit. That's a less strong army, but a successful march nonetheless. Now here, the bears, we look at it in the exact same way. We have an army of bears that march downwards, and if it's a big candle, well, they look pretty strong, they've got a lot of stamina, and if it's a smaller one, similar analysis, but a less strong army. Now I like to look at wicks like fallen soldiers on the battlefield. These are soldiers that have attempted to march into enemy territory, but have failed. Here you can see an army of bulls have gone up and back down and ended up over here. This signifies a certain degree of volatility. It also makes the candle a little bit more neutral, because even though the bulls have moved up from here to here, you can see bears have moved down from here to here. And at some point, bears were strong enough to get the price all the way down to here. Here you can see a similar candle, but you can see that there was less war on the battlefield. So the bulls didn't go quite as high before getting pushed back down, and they didn't go quite as low before managing to push back up. And you can apply the exact same argument to bearish candles. Now, the relative part is extremely important here, because when you look at the candle, you look at it in proportion to the size of the body. If it's very small in proportion to the size of the body, the majority of our data is the body itself, so we focus more on the body. If the wicks are larger relative to the size of the body, then the majority of our data is coming from the wicks, therefore we attach more significance to the wicks and less significance to the bodies. Now we're going to look at a specific case where we have wicks above a candle. Here, when we have a wick above a bullish candle, this is a sign of weakness, especially because this wick is much bigger than this body. That means even though bulls went up from here to here, bears managed to push them down a greater distance. In this example here, you can see a more equal battle. The bullishness of this candle is somewhat negated by the fact that the bears managed to push the price back down this much. Here, in this example, you can actually see that the bears barely managed to push the price back down at all. So this candle remains mostly bullish, though not as bullish as if it had no wick above it. Now, it's a little bit trickier with these candles over here, because you can see that this bearish candle managed to get all the way up to here before getting pushed back down to make new lows over here. Now let's bring the army back into play over here. You can see that here the bullish army tried to get into enemy territory, but then the bears fought back and pushed the price down loads. All of these here are fallen soldiers for the bull army. Look at all these fallen soldiers. Yeah, they gained this much space, but look at how many soldiers they lost to do it. Here, they managed to gain a certain amount of space, but lost less soldiers. And then here, they gained some space, barely lost any soldiers. It looks really strong. Now, in this example, stuff changes a lot, because the price opened over here, the bulls managed to push it back up, but then the bear army not only took out all of the bull army, but then they pushed the price down even further. So look at this, all of these are fallen bulls, and we've got a big bearish candle as well. So that is a very bearish candle over here. Similarly, over here, we have not only a big bearish body, but a big bearish wick above of it as well. So wicks that are above are going to be bearish wicks. They represent fallen bull soldiers. Now, the opposite over here, we have fallen bear soldiers. Here, this bullish candle not only has this body, which shows the bull army marching into enemy territory, but all of these fallen soldiers over here from the bear army. So they defeated all of these bears and then gained this ground. Here, defeated all of these bears, then gained this ground. Now, on the other side, we have this big bearish candle. Well, yeah, the price went down, but it was pushed back up. Even though the bears gained some ground, they have all of these fallen soldiers over here. Again, over here, they have fallen soldiers, but it's somewhat balanced out by the fact that they managed to gain a similar amount of distance as well. Here, this is a pretty bearish candle because they lost a few soldiers, but mostly managed to gain ground. Now let's summarize. A large wick, what does that represent? Lots of fallen soldiers, either for the bull army or the bear army. This means that there's been a battle within this candle. That battle represents uncertainty. So if there's a big wick above or below, it represents a certain amount of uncertainty and that there's been lots of movements because the price hasn't just gone straight in one direction, it's gone up and down a lot. Next, we have a small wick. A small wick represents not too much battling, but a little bit going on. This represents a slight amount of uncertainty and less movement within that candle, and fewer fallen soldiers on each side. Now we're going to use everything we've learned and this analogy to master every single candlestick pattern there is. So I want you to imagine a meter. A meter where on one end we have the bears winning the war, and on the other end we have the bulls winning the war. Every time you look at a chart, this battle is constantly ongoing, and we're going to move our bias across this meter. If we're really bearish because it looks like the bears are winning the war, we're going to be more bearish and lower on the meter. If we're really bullish, like the bulls are going to win the war, then we're going to be closer to the bull side. We're going to take that bull and bear meter right now and apply it to the chart and help interpret what is happening in the market using absolutely nothing but candles, maybe a little bit extra here and there, but I'll try to keep that to a minimum. So right now you can see at the start over here in actually April 19, price is going up aggressively, doing really well. And then over here, look at these giant wicks. What does this represent? These are fallen bull soldiers, a bunch of bull soldiers falling and losing this battle. Now take a look at relative size as well. Look at the size of this wick and the size of all the previous candles. It's just as big, if not bigger than those. Therefore, that represents a huge win for the bears. And right here is when the tides of the battle change. And you can see the bears start winning all of these movements into bull territory. Take a look over here. You've got the bulls trying to get back up, but in these two candles, they can barely get back all of this lost ground in the previous candles. And over here again, bears are winning, pathetic attempt by the bulls, and bears continue to win. If you take a look at the chart, this continues to happen as it goes back down. You can see bulls do one big push up over here, and they're starting to regain their ground. But the thing is, look at this, two bull candles over here, barely trying to fill up this one bear candle. So right now, bulls still look extremely weak. If you zoom into the micro, just this period here, they're starting to look okay, but every attempt up is still being aggressively sold down. At this point, when you see this one big candle come up over here, that is when the tides of the battle are starting to change a little bit. Because not only have we defeated this bear candle over here, but in one candle, we've taken out this one over here as well. We've had a bit of a rejection, but prices come back up again. Now the final big candle that we want to defeat is right over here, because look, this whole thing is that one huge bear move down. Once we get above here, the bulls have made it, and they've got a lot of free territory to gain back. Here we can see it's going sideways, but we remain relatively bullish because look, even though the price is going sideways and not still up, after all this period with the bears barely being able to do anything, right now the bulls are holding their own. They're not giving up any ground to the bears outside of wicks as they attempt to break this area here. And look, we're using absolutely nothing but the candles over here to figure this out. You can see this area over here, the bulls are really struggling to get above. And then in one fell swoop, you can see the price gets above this area over here. And that signifies a huge victory for the bulls, and you can see following bullish candles. Now, a lot of people over here like to think it's too late to buy. I often say buy high, sell higher is a very viable strategy in crypto, and that's because when you take a look at this analogy, you can see the bulls are winning the war. Why would you bet against people who are clearly winning the war with no signs of losing whatsoever? Now let's keep watching the chart. Here, the tides shift a little bit. We see one big victory from the bears over here as the price comes back down. But it's not quite enough because look, it's now 10th of August 2020. Since the 16th of March 2020, the price has been going up non-stop. The bears need to do more than this. They need to at least overtake this big move up here by the bulls. And in no time at all, the bulls regain control of this war. And you can see, why would you bet against the winning side? Non-stop, the bulls are winning. This is why in crypto you buy high, you sell higher, because the price just does not stop when it starts. However, over here you can see this first big sign of resistance, because after ages of only the bulls winning, the bears finally showed a little bit of strength. Now this isn't enough to turn bearish, but I would be cautious here because the other army's shown a little bit of strength. Hopefully you can see how simple and effective this strategy is, just imagining a war going on and you trying to gauge what's going on in that war. Here, a few more candles, the price comes back down, the bulls try to get back up, it rejects, you have to be careful, but then in one candle, take a look at this. One bull candle has just taken out 1, 2, 3 bearish looking candles. This one's a bit bearish because of this huge wick above of it in one candle. That is a huge sign of strength. And following that huge sign of strength, where one candle has just taken out 3 relatively bearish candles, unsurprisingly, we see more upside and more strength from the bulls. Now, this candle is a lot more scary than this candle. If you've been paying attention to this video, you should be able to tell me why. Remember, relative size. This body has just taken out an entire bull candle by itself. Just like over here, this whole body just took out 2 bear candles. That makes me bullish. This makes me bearish, not cautious. This makes me now bearish. I think the price is either going to go sideways or down. After this candle, it took 2 bull candles for the price to get back up. It goes sideways, it makes it a little bit higher in this push attempt over here, but as you can see, following that, another huge candle here, taking out 2 bull candles, the price goes down. And now how did we detect this early? Just by noticing this one candle over here. That was our first hint that the tides of war were about to change. Price went up a little bit more, but it generally just went sideways and then came back down after. And needless to say, these 2 candles now represent either sideways movement or bearish movement. Again, look at all these fallen soldiers on the battlefield over here. Clearly, it's difficult for the army to get past this area right here. And you can see the tides turn right in this area. So that's going to be it for this example over here. We'll go into so many more strategies, but at the end of the day, simplicity really is key. Just by analyzing the candlesticks closely and seeing what's happening on the chart, you can gauge so much about the market. And I'm definitely going to give you some exercises in today's assignment around this. Now that you've seen me use this in real time, let's break it down into the micro so you can take away a specific template that you can apply to the charts every single time. Start by recapping the key principles of data analysis. Context, always keep the big picture in mind. Sample size, the more high quality data you have, the better. Quality, all data isn't equal. Learn to identify outliers. Keep it simple. Complex doesn't always mean better. Let's start with an example. Take a look at this candle right now. In isolation, this is a very bullish candle. The size of the body is relatively large. The wick in proportion is small. This shows the bull army making a good move into enemy territory, and the bears could barely push them back. Now let's look at it on a chart where it matters the most. Here we have that exact candle. Now, context. It's a relatively large bullish candle. Relatively large because looking at every candle before it, this is a very big candle. So in context, it is very significant. But we can't use this alone. We need to incorporate the data around it. Look at these candles down here leading up to this big candle over here. All of these are the bulls winning the battle. Bears, it's all going sideways over here. And then you can see continually the bulls won here, the bulls won again here. They lost a little bit here, but then won again here. So the last 1, 2, 3, 4, 5 candles are bullish as well. So we've got one large candle and multiple small candles before supporting our bullish bias. Quality doesn't look like an anomaly. It's a very normal piece of data. And finally, keep it simple. This makes our bias more bullish. Now let's try a slightly more difficult example. Take a look at this candle over here. Now it's got a fancy name, it's called a hammer actually, but that's entirely irrelevant. The incorrect way is to memorize the name and what this pattern means. The correct way is to take a look at this and figure out the significance. You could also argue it's a hanging man, but the whole point is the names do not matter here. What matters is we have a very tiny body. So we can almost entirely ignore the body of the candle here and focus purely on this disproportionately large lower wick. And remember, what does this represent? A whole bunch of fallen soldiers for the bear army. So the bulls have just managed to take out a huge portion of the bear army's forces. Obviously, that is going to be bullish. Now let's look at this on a chart because that changes everything. Here you can see the pattern on the chart. Let's paint the picture. Price is going down. We're in a bit of a downtrend because you can see the bears are winning the battle. Price is going down, going down. Here the bulls have a small victory, but again, they're rejected immediately after. They can't gain any ground after this. It goes sideways for a bit. The battle is neutral, and then the bears make another push. And then here, this huge wick happens, and the bulls make one big push up. Now look at this in context. It's a disproportionately large wick relative to the body size, but also the local data. This one wick here is bigger than almost every other candle behind it. So we know that this candle is bullish. But remember, we need to look at the sample size as well. How much data do we have to suggest that this is bullish? Because if you look back, we've got loads of bearish data. Well, it's only one candle, but it's significant. So at this point, what is our bias going to be? Well, keeping it simple, this is bullish, but we need more data. And we do actually get more data in the next few candles. This candle here is a bit of a push up, and this one here is a bit of a rejection. Now these two are a lot smaller than this one big significant piece of data, so they don't change our bias too much. They're a bit of a weak push back up with a bit of rejection off of this point here, where they fail to claim the ground this candle over here gained. But then we've got this second big piece of data over here. Once we get two pieces of data like this is normally a great point to change your bets. So I would have maybe, if I was feeling risky, bought down here, but then when this second candle comes in, I definitely go for a buy, and then I wait for the price to go up, which you can see it steadily does with another big rise over here. And we would have been able to predict that entire move up by first spotting this candle here, and secondly, this big second piece of data over here. Risky over here because the sample size is small, less risky over here because the sample size has gotten bigger. Now, we have another pattern over here. Take a moment and try and paint the picture in your own heads as to what exactly is going on over here. This is called a bullish engulfing candle. And the name, again, it's irrelevant. Take a look at the picture. What is going on with the armies over here? The bear army made a push into bull territory, and then the bulls completely destroyed the bear army, doing a move that was twice as big as what the bears did. So this pattern, everyone memorizes it as bullish, but we don't need to memorize it because we can see that this is bullish price action. The bulls are beating the bears disproportionately relative to this candle here. This candle here is large. Now though, we're going to look at this candle in context. It's a relatively large bullish candle in the near context. So this one green candle over here is bigger than most of the candles before it. But as you can see, this isn't even sideways. All of this is pretty much going down in a straight line with one big wick over here that could actually be the first thing I treat as a little bit of an anomaly because it's out of place. After this, no big move followed it. Price just continued to go down in a smooth line as it curved over here. So this looks like a little bit of an anomaly to me. This isn't data I'd pay too much attention to. Now this candle here is bullish because it's bigger than most of the candles before it and it gains a significant amount of territory. But if we're taking a look at where the bulls showed strength, the last place I can see is this big rejection over here. This is where the bears really defended multiple times. Wick coming down, wick coming down, wick coming down. And the second we approach that, the price then starts to go down and sideways. And how could we have predicted this? Sample size. Remember, this is just one bullish candle. Everything else before it looks extremely bearish. So what we need to pay attention to, like last time, is what's going to happen after this. If it went sideways and then we got one more big green candle up, then I would have bet on continuation because you've got more data backing your theory. Quality doesn't look like an anomaly. You could have taken a high risk bet over here. Let's say, for example, the market news and sentiment was really good for the coin over here, and you knew they had a big announcement coming up in the not too distant future, so you had multiple other reasons supporting this thesis, then maybe you could have made your bet, but this alone is not a lot of data. So to keep it simple, this is bullish neutral. It's not significantly bullish, it's not significantly bearish, but it's an important piece of data which in conjunction with other data could have made a great trade. The important takeaway here is that just because a pattern is bullish or a candle is bullish, it does not guarantee that the price moves in any direction. You need to take into account the bigger picture. So the conclusions of today's lesson. Number one, don't waste time memorizing patterns. You don't need that. Just understand the underlying metaphor of the wars that we explained today. And if you understand that, you're going to be able to understand every single candlestick pattern in isolation, in the context of the bigger picture, and well beyond that. Finally, today's assignments, which will be posted in the Telegram, are extremely important. We're going to give you so many examples to practice this metaphor, this analogy, so that you will come out with a perfect understanding. Also in the Telegram, you'll have access to a written episode summary, extra reading material, and much more. Stick around. Next lesson we go over support and resistance.